what can I tell you? It's it is what it is. There's no disputing that the markets are what the markets are, and what can I tell you? They do what they do, and we can't tell them what to do. They're going to do what they want. Now, a lot of things going on here, including really crappy volume. But again, volume doesn't mean that we can't trigger, reversals and all kinds of stuff like that, which is obviously always something to think about. I don't think we'll trigger any reversals tonight, but you could. We are long the Dow. But again, this is part of trading. This is always the I don't know what part will we call it, the pain in the ass part of trading. It's a market that is, suddenly, after being in turmoil, I guess the world is okay now. Everything is fine, and there is nothing else to worry about, right? We've solved the inflation problems. We've solved all the problems, and everything is running up again. And of course, there'll be those that will say that, well, there's money on the sidelines. Well, there's always money on the sidelines. Okay. What you probably had here is a pretty solid short covering rally. What you probably had here is, again, we know one thing for certain. Okay. The markets tend to lean higher most of the time because, of course, we know that the statistics tell us that the markets go up 8%, 8.5% year over year. Now, we've had obviously quite a big rally, and we had a hard sell-off to start the year. It is the last day of the month, which could be something. Again, I'm not saying it is or it isn't. I don't know any more than anybody else. I can just read the chart. I can read the tape. And to me, this is the finish off of Friday's rally, and we'll see. We'll see where it takes us tomorrow. I think we're at resistance in the S&P. We had two resistance areas. One was we held on Friday, and today we're holding on number two. Now it's an awfully big rally, so it certainly isn't comfortable, but it is what it is. And of course, the Nasdaq, the same thing. We're now in this secondary spot, which again, I don't see anything that has changed, from a reason of why we went down or why we're going up. So we'll see. Would you call? You could call it a V shape from the start. Yeah. This was a blow off to the downside, which we talked about. Okay. Obviously, you had to catch it intraday, and we kind of held about it and it popped. So yeah, it could be. Look, I'm not saying that we're not going to go higher. Okay. I'm not saying that we're definitely going back down. I would think so. That would be, if I were to give you my prognostication, I would think we're going to go lower from here. But again, I am not in the business of predicting markets. I am not in the business of taking guesses. I'm in the business of letting the markets tell me where they want to go. And the last 2 days, after opening lower on Friday, and they were down pretty nasty. That rally was vicious, which is what we say about, bear market bounces are the most vicious you can get. And that was certainly vicious. And today, they were a little bit lower early, but then took off once again. And these are big numbers. Now, when you look at it percentage wise, the numbers shrink a little bit. Okay. But still, they're big numbers, right? Again, if we look at it from a percentage basis, I always like to equate things back to like if I had $100 stock and it moved this amount of percent, would I be nervous? Okay. But we do, unfortunately, because of the pundits and I guess maybe human nature, we do get caught up in the size of the numbers, even though percentage wise, they're not anything, really to think about. The Dow was up 1% today. Okay. The S&P is up, 1.5%. So if you had $100 stock that was, that moved 10 cents, would you think about it? And I think the answer is probably no. Okay. So, again, where are we going from here? It certainly looks good. But this is where I will talk about volume, which I don't normally concern myself with. And I'm not concerned. Look, if my signals trigger a reversal, I'm going to reverse. I'm not going to say, well, the volume's light. But based on the overly light volume, based on the day of the month it was, which is the last day of the month, which might have been some, marking and window dressing. Again, we'll see. We will see. First of all, what's up, guitar boy? We'll see, if the signals change, which I don't think they will, but it's possible. Again, I don't know. I don't know until later. Okay. I could make a fairly good guess, but I don't think they will. But again, I could be wrong. But I would suspect that, if this kind of continues in the morning, it would be a great selling opportunity. However, if they take them down again, this is one of the differences in trade, okay, from a professional floor trader to watching the screen, but in trading in general is, because they're open on Sunday, like Sunday night, so they reopen Sunday. So sometimes, many cases, we get some balance, overnight, and any of the real fear that might have been out there might get relieved, just by the way that they opened. So it has changed. There isn't as much compression. Attention is if the markets cannot stay green on the first trading day of the month, when the gazillions of money, IRA and pensions hit. That's a good point. I'm going to read this one. The thing that always catches my attention is that the markets cannot stay green on the first trading day of the month, when the gazillions money, IRA and other pensions hit, other money managers to invest. That monthly program money is there to be sold into, road higher will be interest. Yeah, and I agree with that. But again, remember, money does flow in every day, from those same places. Typically, yes, monthly is usually pretty big, and we'll see. The end of the month, the beginning of a new month, at the end of a crappy start to the year. If you look at it again, if we go back to, the start of the year, I mean, here is the close of 2021. The Nasdaq closed at 16,320. Okay, today it's at 16,480. So we're down. We've come back from being down over 10% to being down about 6%. Okay, so we've had a big rally. Now again, we'll see where this indeed leads to in the future. Again, I'm not in the business of predicting. I could be a carny weight guesser, right? I can't do that. I know that when I try to outsmart or outguess or outthink the markets, typically it ends up in a loss. Okay. And I've done this for 44 years. So I can tell you honestly, I'd love to have back all the guessing and the opinionated things that I had done over the years, because I think that I'd have, a hell of a lot more money. Okay. Because I don't think, I've had some big wins, but I think overall, I think trying to outguess the market has been more of an expensive endeavor, just like, all the hot tips, I've gotten over the years, all the sheets and sheets and sheets I have of not applicable when you look at your statements, because obviously I had plenty of those too. So again, I don't get rattled one way or the other. Okay. I've been through and traded through the major collapses. I've traded through all the bull markets. I was standing on the floor in 87. I was standing on the floor in the 90s. I was standing on the floor in 2001 when they collapsed, and in 2008. So, again, I don't get concerned about it. I understand that, you go through periods in life that are good and bad, and it's the ability to overcome and keep yourself emotionally balanced. I think that's one of the biggest problems, is that too many people get away from being what I like to call even keel. Okay. You have to be base neutral mentally all the time, because if you allow the markets to get into your head and you allow the swings, first of all, it means what? What does it mean if the market is getting your head typically? What would we say would be the first problem? 2018, November, December chart? Yeah. Okay. Well, yeah. I mean, again, it always looks interesting. Look, you see always these big collapses come from these types of rallies. Now, again, I'm not saying that we're going to collapse. Again, I don't want anybody to get confused. Okay, over leveraged, right? Okay, or you're trading bigger than you can afford. Okay, that is what. Oh, my brother is here. What's up there, doctor?
Hello.
How are you? What's going on?
Well, the S&P 500 avoided a monthly bearish key reversal by the skin of its teeth today.
Right, and it's still, we'll see.
Just confusing matters, right?
I mean, it's an interesting end. The last 2 days, as we were chatting before you got here, were interesting in the way that the market's traded. But again, I don't know that the overall trend has changed. I think that if you look at this chart, it's still pretty skanky, pretty ugly. But again, we don't know. We'll see. How it develops. We'll see what the algorithm says and where that comes to. And again, I was just saying that you shouldn't get too emotional. And if you're getting very emotional in the markets, either you don't belong to be trading, or you're trading at a size that is too big for you to handle. Okay.
Yeah, this is a market to watch the leverage in, big time. You got to watch it. You got to be comfortable with what you have, because you always have to live to survive to play another day.
That's right, because if you remember that I believe that trading itself is a game, okay, which it is, and it is a mathematical game. And if you put yourself in a position that you're out of the game, you could be like you're in Seinfeld, out of the contest.
Right. Okay. Another lesson came late last week from the natural gas market.
Mm-hmm.
Where that's the market where more people get carried out than anything.
Yep.
And it's a lesson about leverage.
Right.
When you get to leverage, you expose yourself. And in these kinds of market conditions, you have to watch that leverage, because the leverage is not your friend, it's your enemy.
Right. Because and too many people look at it and they think that I can handle it, because when you're making money, when you're over leveraged, there's nothing better.
Right. Your biggest enemy is complacency too.
Well, that's
become complacent.
Complacency is the architecture of our downfall.
Right. Exactly. So, who said that? Bubba.
I don't know. I had it.
You did just now.
I had it as a slide I've used for often over the years. But it is, and of course that does play out in volatility. As volatility falls, you get complacent. That tells you that the markets are complacent, and that usually ends up in an ugly ending. Now, again, we're not in the business of predicting, what is going to happen tomorrow. I have no idea. Okay, I can tell you, what I think, what it looks like. I was on with Liz Clayman on Friday, and I said, look. I'm not really that hepped up of investing a lot of new money in this market right now. I think it's a little bit overvalued. I think that we're really into a bear trend. And I said, I would expect to see some sharp rallies, but let's see how they play when it's all done. And, again, remember, and again, if you listen closely to what I say all the time, I'm always long the market in general, and I'm just always hedged the market in general. Okay, so I'm never out. I'm all my IRAs, my profit sharing, my 401k is always long the market. I'm just always hedged.
Yeah. So I would be surprised tomorrow. I mean, nothing shocks me, so I would never be shocked, but I'd be surprised if the market finishes up on the day tomorrow. I would be.
I would agree. Again, I think you're
but
correct. I mean, but again,
anything's possible. But would I be surprised if it comes in big up and then fails? No.
that would be more what you, that would probably be like what you'd like to see. We didn't get that when we talked about last week, what we wanted to see. And I was explaining, I think before you got here, that, because of the extra additional hours that markets trade now, you don't get as much compression. So the moves that open are usually not as clear as they were when
Right.
you had a compressed market, okay, and you only had a shorter period of time to trade.
Right.
Okay. So what's on your mind, young man? What are you saying? What are you seeing in the world?
Well, this Russian thing is scary. My gut tells me that it's going to wind up, we're not going to have any war, but then maybe that's wishful thinking. I don't know. I try to.
War with us in Russia, or Russia?
No, just war in general with Russia.
In Ukraine?
Yeah. Because
I have a few, believe it or not, some very good Russian friends that are still tied in deeply into Russia, and they say they're laughing there. There's no chance that there's a war going to happen. And again,
I would be very shocked, and
I don't say that as gospel. I'm just telling you what they tell me.
Right.
I'm passing on the message.
I mean, if anything, Putin's smart enough he can manipulate the situation, and already the Ukrainian president is sounding more like, the U.S. media and the politicians are hyping this up. They're going too far, and that's exactly the message that Mr. Putin would like sent. And it sounds like he's having more influence with the Ukraine leader, and if he could co-opt him to come over to allow Russia to feel that its sovereignty is protected, because remember, we consider it Eastern Europe. He considers that Ukraine, Western Russia. I don't think there's going to be war. I think it's all a lot of hype and a lot of BS.
That's what I hear. And again, I don't follow.
The other thing that's on my mind is I cannot believe this garbage that's going on with Spotify. And freedom of speech is attacked. It's like on a weekly basis here.
No, we no longer have freedom of speech, but that is actually, believe it or not, that is, I think, 0.3 in Bubba's thoughts. So we keep talking about it now.
I didn't mean to beat you.
Listen, we're here ad hoc, ad lib, and we
don't collude on this before we get on. That's.
But I do have a very serious question to ask you. Okay, now that I've been trying to sell my house.
Mm-hmm.
Okay, that I'm going to lose somewhere near in the neighborhood of about 400,000 when I finally sell this pig. And I had an offer, and it's kind of accepted. But now, as always, they send in the clowns to look at things, and they tell you how much more that you need to take off. And I said, scratch your what. But in the meantime, I'm trying to sell my house, and I've now bid on 3 houses to buy, because obviously I'm buying a house for Xander, that he will actually be the owner, and he'll buy from me. And I'll have my place to live in Chicago, so I can take care of my mom and my dog and, my wife, because she's here more than, she's in Chicago more than I am. But so far I've bid full price on 3 houses, and I haven't gotten any of them. Okay. And I had a house that we looked at Saturday, and it was X, and I go, okay. And the broker said, well, it's probably going to go, I could see it was crowded. There was a lot of people looking at it. And it was a nice house. And I go, okay, I'll give you an escalation clause. You can go up to X. So she emails me today, and they said they had a lot of offers. They like your offer. They like your bio and blah, blah, blah. And that you're going to write a check. And I go, okay, but I said, I'm not going up. I said, I gave you my cap. So again, my house, I can't get rid of yet. Every house I've looked at is going for over list in Chicago.
Are the ones you're bidding on new homes, or the existing?
Existing.
Are they in different neighborhoods?
They're in lesser neighborhoods than where I live. Okay.
Unbelievable.
I mean, I don't understand it, but again, look, it has to be a house that Xander can afford, and he doesn't need 2 acres and what I have. But so it's amazing that in this day and age, in this city, in this state, that people are now once again paying over list, which tells me that there's a much bigger issue in this economy than we've even really realized yet. But anyways, that's my question. That's my question. Solve that for me, will you?
That's really, really bizarre. It really
We're
is.
sending millions of weapons to Ukraine so that Putin can have handed them out to our government leaders. Well, I mean, our government leaders, look, and again, I'm trying to go a whole call without talking about this administration. Okay. That was my goal for today. But I'm going to say that government in general, okay, for my lifetime, I believe, has done a pretty piss poor job at managing the country as a business, which is really what it is. And the federal government continues to grow, and as does the debt. Now, the number of the debt is, to me, is immaterial, because the number of the debt, as the numbers get bigger, they just multiply. I mean, everything is back to percentage basis. But I think that government in general, obviously, we've said this many times here, needs to be changed, and the way we kind of go about doing business needs to be changed. And I think those are the issues. And you can blame this administration for whatever you want now, but in general, the entire structure is effed up. What are your thoughts there, Chief?
I think whatever's going to happen in the election, the midterms, the side that loses is going to say that it was fixed.
No, but I mean, you agree that the system itself is kind of screwed up and needs to be tweaked, and we need to make a lot of changes, including getting not just two parties on ballots.
Yeah, I do. I mean, I think we need constitutional changes.
All right. Okay.
That guarantee freedoms.
Right.
Because we don't. I mean, it goes back to my bitch, which is the Spotify thing, and I know it's on your list, but
no, you can bitch. Go.
It's like, to me, it's like, if you don't agree with what the media and what the party in power is saying, then you're canceled.
Right.
And that's very upsetting. I mean, this is freedom of speech. All opinion. We have to learn. We have to go back to learning how to agree to disagree. That's what we have to do. How do you write that into the Constitution? You're allowed to agree to disagree.
You only get freedom of speech if you agree with them.
Right.
You don't get it. Otherwise, you don't have freedom of speech.
Right. Otherwise, you're a lunatic.
I mean, it is sad, and you are 1000% right. And again, I talk about this every week on Bubba's Bottom Line. The continuing to take away our freedoms in every little bit and way. And I'm a customer of T-Mobile. I think that's in my notes too. But the Supreme Court knocked down the vax mandate, right?
What did they knock down?
They said no vax mandate. You can't do it.
Right.
Okay. And some of the corporations are doing it anyways. And I go, well, any corporation that's going to do that, I'm not going to do business with them. Because again, to me, whether it's right or wrong, and I don't know the right answer. Okay. As I've said, I'm vaccinated. I know you are. My wife, my whole family is vaccinated, but I don't know what the right answer is. Okay. And I actually read, believe it or not, and I hardly ever read, but I actually read an unbelievable article from a scientist that believes in the vaccination, but says that mandatory vaccinations are wrong. Okay. And so that's just another way of trying to chip away freedom, because if you're going to
what's amazing to me, that in California, they're really, everyone has to be vaccinated. They want to vaccinate 5-year-olds. And yesterday, and they have a mask mandate indoor and outdoor. And yesterday they showed the governor, the mayor of LA, all at the football game, the championship game. They're all not wearing masks.
Right.
That's unbelievable.
Right. Isn't it amazing?
I think unbelievable.
I can't. And by the way, what did Patrick Mahomes go on vacation at halftime or what?
He did.
God almighty.
It was like the stock market.
What did he do?
He came in looking great in the first half of the day, and then boom, fell apart. I will tell you, I did bet on Cincinnati. Well, I like the spread.
I had Kansas City on the money line, and I had them tied to everything. And I had
Cincinnati, and then I had a parlay Cincinnati and San Francisco, which I lost on. But
I
just took the dogs. I took the dogs because you know what? It's a crazy year in football.
No, whatever. And in the meantime, he went on vacation, and they still should have won the game.
Right.
But it's amazing that the Joe Burrow is unbelievable, which is I knew. I mean, I always thought he was unbelievable. Anyways, we actually drafted him for our team, but he's it was an amazing turnaround in events, and of course Jimmy Garoppolo proved that he stinks, and that's
he was San Francisco. They have a great defense. I think their defense is pretty good, and they Garoppolo had every chance to win that game and couldn't do it.
Artists have the right to pull their work if feel in misinformation. I agree. A
Yeah.
strong leader can show and explain what is right for their constituents. A weak leader can only mandate. Yeah. And thank you for your Sunday rant. The American, I'm trying to stand up. It's hard. It's hard to stand up because everybody tries to push you back down when you stand up for what you think is right. And go ahead. I'm sorry.
I agree that artists have the right to pull their stuff. I mean, I have no problem with Neil Young. I have a problem with the media, and how, we're just, Joe Rogan is a personality, he's a comedian, he's a personality. He say whatever he says, he can say whatever he wants. He's not, just because he has a lot of followers, people are not just following him off the side of a cliff here. I mean, he's an entertainer. He's allowed to have his opinion. Neil Young's, we're all allowed to have our opinions. But it seems that, if you don't have the status quo opinion, the blessed opinion here, then you're some kind of a nut. And that's not right. We got to agree to disagree. That's the
100%. I will, if you remind me later, Jay and Key, I'll look at it. I'm not going to do it now. Or there's one other thing I wanted to mention. Oh, my pick for the Super Bowl it happens to be the Rams. I had the matchup for months, Rams and Kansas City. So, and I want to see Matthew Stafford win.
And I agree that they'll probably win, but I would love to see Cincinnati and Burrows win.
Well, again, I
like Cincinnati.
I love Burrow. Don't get me wrong. I love Burrow. Yeah. So as we look,
it'll be a good game.
Well, we'll hope so. They've been.
By the way, this is the one thing I will tell you. Every game has been a great game.
Listen, every game has come down to almost the last possession. So 6 in a row.
Yeah.
So the dollar continues to move higher, and after the spike on Thursday, which is probably fear-induced, and then a little bit of a rally Friday, it is now falling apart, but we are still long dollars. And of course, again, we don't recommend trading this actively. We do carry it in our portfolios. But what do you think here of the dollar? Is it going back to par?
As interest rate differentials, a Bank of America last week said we're going to get 7 interest rate hikes next year. It's a function of interest rates, and all fiat currencies. I've said this before. I think they're all garbage, and the dollar's just the best piece of garbage.
Yeah,
that's it. So
right.
that's why it's going there. Technically, it broke out. Technically, it looks very good, but fundamentally, hey, it's the dollar. What are you back? What's it back with? 29 plus trillion in debt.
Private, send me an email. I'll send it to you. I forgot to include it. It wasn't finished yet. Send me an email. I'll send it to you, buddy. Okay. So I love Joe Burrow, and he'd be the only quarterback in history to win the national championship, the Heisman, and the Super Bowl.
Wins the Super Bowl. Yeah, that'll be
the only quarterback in history, the only player in history to do that. Yeah. Win the Heisman, the national championship, and the Super Bowl.
Yeah.
So, anyways, so the dollar. Look, I think this is probably support. Okay, at about 96.50, and I think it's still 96.50, 97.50 now. It kind of just eases its way up. And again, we know that these fiat currencies are crap anyways. So we'll see what happens from there. And then of course the euro currency.
By the way, you can't understate the importance of having home field advantage for the Super Bowl.
Not for the Rams. They got no home field advantage. There's more 49er fans there yesterday.
I know, but they do have it.
Well, it is a big.
It's a big thing.
It's a big thing because, hey, listen, you can give me all the stats you want, Private. Whatchamacallit, Kansas City was 8-1. Okay, again, look, I tell you what, the whole game turned into one play, but I don't want to talk about football.
You know what? Any given Sunday, that's the way it is.
Yeah, but I mean, that whole game turned right at halftime when the dumbass didn't take the 3 points or at least throw the ball into the end zone. But anyways, the euro currency, okay, again, we're short. Yeah, had a big rally. And I told you these big rallies show up everywhere, in bear markets. And you had almost a penny rally, which is, that's a lot. If you look at it in real dollars, okay, a penny rally in the futures market is $1,250. That's a pretty big move, okay? And, again, but really where did it come to? It just came to resistance. I mean, I would say that we're at, 111 to 112.50 in the euro currency. And I think it still looks like garbage. And I still think it's going below par, okay? I think we're going back to the 88-cent level we made back in, I don't know, either the early 2000s or late 90s when it first came out. So I don't think it's any longer the strongest, the best horse in the glue factory.
And they all stink. That's what I think. They're all horrible.
Yeah, well, this is when you let governments and central banks take control, clueless idiots that have no idea of how markets work. They have no idea that asset classes can actually really price themselves, because buyers and sellers will determine what the prices should be. Okay. Now, you're just like salaries, the market decides what the pay should be. This is no longer, slave labor times. Markets can decide their own things. Where will people work at what price, right? We're finding out that people aren't going to work even at $17 an hour now.
Right.
So, asset classes know how to price themselves. If the central banks and governments would stay out of them, they'd have perfect markets. But of course they can't. They have to have control of everything. And again, that goes into stealing your freedoms as well. Bitcoin, again, did it find a bottom? Maybe. Okay. I got news for you. This is a hell of a big week for Bitcoin, for the crypto world, okay, which we'll talk about in my thoughts as well. But this is a big week coming up. But we're still short in our portfolio, and we're short the euro, by the way. I didn't mention that. But I mean, Bitcoin, I would suggest there's probably some resistance at 40,000. I would say that anywhere between 32 and 40,000 is probably the trading range right now. Any thought there, Chief?
Yeah, I mean, this thing is just, it's got to digest that. Look at it, it's halved in value. So it's digesting, and it's got to establish a base. It's got to stay above 28,000. That's what I think.
Okay. Listen, I don't, listen, I know that it is wild. I know that, again, it is a true free market that trades 24 hours a day, 7 days a week. And it's a real product. It's a real player, and we'll see. And again, there's a lot of things this week which we'll talk about. In the meantime, cocoa, cocoa bounced a little bit, off of the lows. Again, now we're short cocoa, but it did bounce, from right there to about 24.40, which is kind of where we thought was some support. Again, really, it's really just kind of stuck in a range, and it was the weakest at the end of the entire year last year, correct?
Yep.
Okay.
Soft, yeah.
And what in your mind, okay, the supply chain, what does that mean for soft commodities in general?
It's bullish in general for soft commodities, and so is energy, but at higher energy prices. But cocoa is an oddball because a lot of them come from Brazil, and then cotton is US, China, India, and cocoa is all about West Africa. So that's why it's got a little different dynamics to it. But I still think that inflation is global, and I kind of like the price action. I think it's stopped at the right place. I think it's got to hold this 2,400 level. If it could do that, it's got another chance at a rally.
Okay. I mean, again, I don't know where we're headed, and there's so many outside issues right now. Again, I go to the store now. Unfortunately, I've had to go grocery shopping on more than one occasion recently, and the shelves are empty. Okay, and I'm talking about big chains that are sparse on goods. Okay, so
people are not giving up chocolate, that's for sure.
Crude oil, again, as we say every week, it's going higher. Okay.
Staircase to heaven.
I
Stairway
mean,
to heaven.
so it would be no surprise. 100 is almost a guarantee. Okay. There is no locks, but that's almost a lock. Okay. But I think you agree that there is an outside chance that it could see the all-time high.
Yeah, that's 147 and change. And you know what? I think that there is a very good chance. If the Russian thing does heat up, there's a very good chance. And those, they're meeting at OPEC this week, and what they'll do, they'll come out and they'll taper by another 400,000 barrels, which is not enough. And, the administration and their great wisdom will continue to weigh on U.S. production and independence, and that's all. It's all very bullish.
Did you move to Idaho? Not you. Did you move to Idaho? Now obviously the inflation problem and the oil problem could be solved in 5 minutes, right?
Yeah.
Is there any chance in your
Drill,
mind?
baby, drill. Frack, baby, frack.
Is there any chance that they ever do that?
Yeah, 3 years down the road.
In the meantime,
yeah.
No, I mean, again, that it's amazing. I always ask, about all these policies and about what the green environment. I talk about almost every week, and what costs are we trying to get there? And in my eyes, the costs are far too great right now. Okay. In the meantime, 86 to 90, Connie. 86 to 90 now. And again, we're not sellers. I'm only looking, I'll sell it on a day trade. I'll sell it for 5 minutes, but overall, it's going higher, and I'm not looking to
and but there will be the elevator down. There's no question. It happens all the time.
Right.
It takes the stairs higher, and all of a sudden, we give up $10. It happens a lot. Look at what happened from late October.
Yeah.
To December, the first day of December, we tanked in that thing. I mean, that thing came down $15.
And we had one down 10 in one day. I mean, again,
right. That is part and parcel for the oil market. That's just the way it operates.
it's not that it's not, again, it'll happen at some point, but right now,
it doesn't look possible.
I mean, again, it just keeps climbing and climbing and climbing, and it's going to go higher, unless the energy policies change. We're going higher. That's all. Okay. And go right along with crude is cotton. Okay. New highs
in cotton. Yeah.
Okay. Now, again, it's, what is the reasoning for it? Does it matter? No, it doesn't matter. The reasoning is that the prices are going higher, and buyers are overwhelming the sellers.
Yeah.
Okay. Now, again, could you look at this as a potential blow off from Friday, Monday, maybe? But again, you have to ask yourself, is that a market you want to get involved in? Okay. And, we're long and have been long. Okay. And I don't see anything that is going to change that right now. I mean, no matter how hard they try to sell, the buyers always show back up. And if we go back where we identify when it made that consolidating move, we said a big move is coming. And of course, we didn't know which way, but certainly it has declared, and it's higher, and it is new highs, of course. So, I don't see anything to get in its way. I mean, if I were going to look to trade it, I'd be looking to be a buyer about 125 or 122.50. Okay. Hard to say that when it was 49 cents last year. Gold, well, and again, did gold rally? Yeah, okay. Well, it just came down from 1850, 1860. So you got an $11 rally. Should I be excited about that, Andy?
No, but it's 1800 is like a magnet, and it's been like that for months and months. It's like it goes above, it gets pushed down. It goes below, it gets pushed back up. It's an equilibrium level. It's a pivot point. It's a nothing. The market's a nothing right now.
You did not miss wheat, sir. Don't worry. Wheat comes, if you look at them at alphabetical, you see I started at the numbers, and then I'm at the G's.
By the way, Bubba, what do you think of this comment? AOC says inflation is caused by corporate gouging.
I think AOC is an imbecile. Okay. I think that she's an idiot. and I
She should write an economic textbook with that as the definition of inflation.
and anybody
Corporate boundary.
and any human being, okay, that is in her position with her big mouth that would take a raise in the middle of COVID, okay, and buy her new BMW or whatever else she drives, okay, when everybody else is not working, should go have her head examined.
Let me ask you something.
Yeah.
Are corporations experiencing higher costs, manufacturing costs, and so on and so forth? The meat manufacturers, are they paying higher wages to get people to stand on the assembly lines?
They can't get anybody to work at any place.
Right. The point is, corporations experience what we're experiencing as individuals on inflation. Corporations just experiencing it on a larger scale.
I got news for you. Let's see how the
And in capitalism, a corporation is there to make money for the shareholders. I mean, you want to change that factor? Okay. You know, if she wants to change that basic principle of capitalism, then, you know, get a constitutional amendment, you know, that we could become a communist country. That
Look,
makes no sense to me.
she's an idiot. They're all idiots when they start talking about taxes and profits and what, you know what? These companies are
It's
suffering.
for the children, Bubba. It's for
I
the
know,
children.
I know.
You heard Nancy? She said it's for the children.
Okay,
She's
right,
running again for the children.
right. You're trying to destroy my children. God help me. In the meantime, we're short gold. And again, look, if it now brings in much lower prices into play, it doesn't mean we're going down there, but we are in that neighborhood. And again, look at the sell-off and look at the little partial rally. Now, 1800 will be the key level. And as a trader, I would sell at 1800 right now until proven that it would reverse and go higher again. Okay, but again, I'm always long gold. Again, I have to remind everybody that we're always long. We buy physical. Okay, but as a trader, I'm trading paper, and the paper today I am short. Okay, so
It's got to hold around that 1750 level.
Right.
That'll be an important technical break if it breaks below. But right now, it's nowhere. It's just nowhere.
Connie, for today, 1780 to 1800. Okay. And feeder cattle, again, benefited from some weak corn prices. But again, this is, you know, suffering from, you know, many different things, and they're going higher. Now we're short feeders at the moment. Okay. But you know, it has really been just in a range. And again, I could make any case I want, but we're short. But again, if you look at it, you can see the potential that this is just a bounce into, and actually could be a blow off potential trade. But you know, this is not something that I would recommend trading actively, nor would I trade actively, because of course, number one, it's the country club of traders. Okay, even off the floor. And number two, it's not that great of a market as like a day trading market, because there's too many things and not enough action to really do anything. Then suddenly, if you really watch the cattle markets closely, their biggest action comes at the dead open and at the dead close.
Yeah.
Okay.
And the next big move in the cattle arena will come on the back of corn.
Right.
Yeah, it'll come on the back of corn. And if you love oil, you got to like corn. So,
right.
You know, so being short makes sense.
Exactly. So, in the meantime, again, I have a position which I'm short, but if I were trading it, I'd be looking at 164 potentially on a rally tomorrow. The hog market, again, continues to grind higher. And my theory in these markets are very simple. Okay. People want to eat protein. And I believe that if inflation continues to rise, the protein from cattle is going to be outpriced for the majority of people. Okay. And the next proteins are, you know, chicken and pork. What do you think?
Yeah, absolutely. Pork is the other white meat. And, you know, pork is benefiting from high beef prices. And I see it playing catch up. I look at that spread between the two, you know, the live cattle, lean hog spread. And I see it coming back to the long-term mean. And,
Are you reading some of those chats? They're kind of they're chuckle worthy.
Huh? I'm sorry.
The chats and the comments. I'd love to see Nancy Pelosi's portfolio. No, you wouldn't. It's probably
I
about
wonder if it's Nancy Pelosi or AOC's. I don't think AOC has a portfolio.
she just has it in cash and what she's scarfed up. In the meantime, again, we're long hogs. You know, I would expect higher prices, and they look really good going up down the curve.
Absolutely.
Copper.
Listen, it costs more. By the way, hogs go up. It costs more to raise hogs now.
Oh yeah.
A lot
Listen,
more.
costs more to raise everything.
Right.
Okay. You know, every cost, you know, you think it's just you know, you think we're just getting tortured because they're trying to because the corporations want to make more money.
It's corporate gouging, isn't it?
You know, the farmers are getting ripped here. Okay. It's not a what the prices are, especially if they can't get them out and get the money.
If
Okay.
you're a farmer and you lease your land, you're screwed.
You know, you got to understand one thing, by the way, just in general, for everybody to understand that's not a farmer. Okay. You know, they pay higher borrowing rates. So they're paying much higher interest than anybody else is paying. Okay. They're borrowing gazillions of dollars to get ready for the year. Okay. Especially the grain farmers. And they got a lot of people to depend on and again, this supply chain issue is killing them. Okay. Because they get stuck holding. You got to keep, you know, these animals got to keep eating. Did you know that? They don't stop eating because you want to sell.
What about the labor, the cost of labor? I mean, and what about the cost of their equipment? And what about the cost of their fertilizer?
Everything. Again, everybody thinks that corporate gouging.
They're gouging.
They're getting destroyed here. Copper, which we reversed and take to the short side. Okay. Again, it's in this moronic range, which is
It's in a very difficult range for trend following.
It tormenting everybody. Okay, if you're trading it. Okay, my local golf course paid $60,000 for grass in 2020, 120. You know, again, listen. You know, there's problems everywhere. These aren't going away because the governments won't let them go away. This is you can thank all the stimulus and all the other stuff for the problems that we are having today and many things. In the meantime, copper, we're short. You know, again, it's the torment of consolidation or churning markets without any follow through is always horrible. And again, if I looked at this chart, I would say that this would have been some support. And of course, it turned out to be. Now, again, doesn't mean it's going to be there. I can see the downtrend, but again, you're going to have to break down through here, and you're going to have to really get some work going to get this to go a lot lower, and it could. But basically, in the short term, it's what 425 to 450, 460. In the longer term, it's 4 to 5, and I know you think we're going through 5 or through 6. I think at one point, I think you believe you said
yeah.
yes.
I think we're going way higher, but I as I said, I could see it going higher there from much lower. Listen, we get a meltdown in the stock market. Copper's not going to rally.
Right. No, I agree. Again, I just, you have a view from a long-term fundamental view, and again, me, long-term could be 5 minutes. So
right.
We have the. That's why I asked to see, because I know that longer term what you're looking for, and of course the short term has nothing to do. Eventually it will, but right now it doesn't. And of course, coffee is in a very, very tight range, which we're long coffee, and it's been kind of just sitting here, which tells us that a much bigger move is going to be coming. Okay, there is no question that a very large move will happen in coffee. And which way? Well, Andy and I both believe that eventually it's going to 3, but the next big move could still be lower. Okay, now we're long.
By the way, $1.76 is 60 cents lower, and it could go there. No question.
No question. So now we're long right now, but again, it could go either way. And I would expect.
Listen, in my service and stuff, I've had everyone long coffee for a long time. On every rally, I've been taking some off because, to tell you the truth, listen, this was, my stuff is fundamental, as you mentioned. You drew the distinction. This is, I trend follow with you, Bubba. But from the fundamental point of view here, coffee is right now sitting consolidating, and it couldn't go either way. So if you're sitting on a long-term fundamental position that you put on down at $1.30 or so, that's a different kind of situation.
Right. Agreed. I just ordered a truckload last week of copper, 4-month lead time when it used to be a week. Okay.
Well, that tells you something.
Yeah. Listen, it tells me a lot. And of course, so I mean, coffee, I would not be surprised if next Monday we come in and coffee is at 225 or is it 250?
Right.
Okay. How's that?
Right.
Because again, this is a point. It's very similar to the cotton market back when cotton exploded higher. It can go either way. Okay. Now, obviously, there's other factors that'll affect weather and so on and so forth. But again, these are markets that when they move with speed and lots of price. Okay.
And they screw the most number of people. They tend to
yes, they do.
That's just the way they do it. Like natural gas. I know you'll get there, but that's what they do.
And lumber, you had 3 days in a row down limit and popped, and now we're back lower, again today. But again, we're still up almost double from the lows of September or August.
Yeah, August.
And down 30% from the top. Yeah. Again, this is a very thin illiquid market, but what is the price?
If you want to trade lumber, I think you should go to a psychiatrist.
Let me ask you this question, but yeah. What does the price of lumber, what does the action on lumber tell you, just from your work and the kind of things you're looking at?
Well, seasonally, it's not the time where lumber is the strongest, but higher interest rates. I mean, look, if you look at the time that it started coming down and it peaked, it's when the Fed started getting aggressive. And the question is, are they aggressive? They're squawking, but they're not hawking, but they're talking, a good game. And that's weighing on that. And that's it all. Lumber's very tied into mortgage-backed securities, mortgage rates, and that kind of stuff. And, so lower demand for new housing because of the high prices. It could weigh on lumber. But there's also the Canada problem there, where there's a shortage in Canada and they're still locked down and have all those problems. So, you know what? I see a lot of volatility. $1,000 for lumber is still a huge price. And this market is so illiquid. Look, how many days in a row did it go limit down, Bubba? 3 or 4?
3. Right?
That's $45 a day. Boom, 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 boom. You're locked in. By the way, if you're long, there's no exit.
There's no out.
No, there's no exit. So that's why we don't trade it. Right. You're on the wrong side. And, the only way they let you in is if you're going to be on the wrong side.
Right.
It's a very, very scary market. I look at it as a benchmark, and the benchmark is telling me it's $1,000. It's very expensive. And no matter which way it goes in the next couple of weeks, it goes down back to 500 or it's inflation. And lumber is very expensive, and it's going to continue to be expensive.
A further comment to the copper, my guy in the inside says there's plenty of raw material. Yeah, there is plenty. Again, we have a labor problem in this country and worldwide. Okay. People don't want to work anymore. They want to sit home and eat bonbons on their couch. Okay. It's a big problem. Okay. No matter what you want to pay them, they don't want to work. They'd rather collect for free. Now, what they're doing now, I don't know.
By the way, a labor shortage also feeds inflation like crazy. This is a vicious cycle.
I don't know what they're doing now for money, but obviously they burned through all their penny slot money that they got for nothing that we paid for. Live cattle, again, we're short this as well, and it looks pretty good though. Again, as I'm a big commodity fan. There are certain prices that I don't like to be short, and I don't mind it up here. This is higher, than I wouldn't be short below $1 up in here. I don't mind trading it up here. Again, I trade whatever it's supposed to be, but I do always have a take. But it looks like we're trying to break out. And I would be surprised if fats, live cattle, and feeders did not change tomorrow. I would be surprised. We'll see. And of course, the natural gas market, which we did reverse to long, and it is exploding now. Well,
You got to
what
put
do
the
you,
continuous contract up because it went above $7.30 on Thursday.
okay.
If
So
you put up a long-term chart, because that's going to show you what really happened.
what do you make of this big rally here?
Someone got shook because someone's caught.
Okay.
Someone's caught, and the administration is leaning. Look, LNG, liquefied natural gas, they're sold out. Companies like Cheniere and those companies, they're sold out, for years to come. So especially to Asia, they bought a lot of liquefied natural gas. So the administration is now leading on these companies to break those contracts and ship it to Europe to put more pressure on the Russians. And that's what's happening in the natural gas market, the global natural gas market. What happened in the domestic one is you had 36 inches of snow in Boston and God knows what in New York, and you had a lot of demand for heat over the weekend, and that's that was bullish.
Wait
But
till those heating bills show up.
right. Oh, what happened on Thursday, the 27th, and that doesn't show on this chart. The expiring February contract went to 734.60 per MMBTU, which is the highest price since 2008. It drew a new long-term chart point, and this is a wild market, folks. This market traded at $1.40 in June 2020. We traded up to 740.
This is the wild west of trading for sure.
This is the reason you don't leverage.
And we're going to be in Chicago in the Midwest. We're going to get socked supposedly twice this week. So
yeah, I saw that.
So in the meantime, $5 is probably some resistance. But again, as everybody knows that day trades with me, I don't typically day trade this. We spike a little higher, I might look at it for a trade only though, but you have to use a stop. And of course, in using a stop in natural gas, that's another challenge because of the thinness and how fast it whips back and forth. So
yeah, and listen, my experience in trading natural gas with stops is that basically you might as well just write a check and deposit it in the natural gas market.
Well, there is some opportunities again, but it is like I said, I don't trade it every day because it's a challenge. But if we get a crazy move, then I know that somebody's getting unwound, and I'm willing to play a little bit. But again, normally, very much, and I always recommend against it. And of course, OJ. Oh, I didn't give me levels. Hold on. Do I give levels on natural gas? Well, I give them anyways. 5 is what I said. 450 to 5, I'd be watching. But again, it looks like it wants to go higher. I wouldn't be surprised to see a little bit of a pullback, but it certainly wants to go higher. And again, with the weather coming in the Midwest and the cold snap that after we had such a mild winter until now. So, and OJ, this looks pretty ugly suddenly. Now it looked great. And then it got creamed on Friday, and it got hammered again today. But it did bounce off the lows off of a blow-up pattern. But at the moment, we're long. Now, again, I'd be shocked if we're still long tomorrow.
It's funny because Bubba, it has nothing to do with Brazil. It got cold in Florida. That was part of it.
Good thing they don't include energy and inflation, right? Or food. God forbid they would give you a true accurate reading. So we'll see where this goes. But to me, this looks like it can go all the way back to 142.50 for sure. It'd be 142.50 to 152.50. Platinum, a little bit of a bounce. But again, these don't look very good. Look, Andy and I are both fans of the physicals. We take money and buy physical. When we make good trades in the paper, we take the profits and buy physicals. So we're always net long the metals, even if we're short trading. Now, we don't trade platinum in our portfolios anymore because it's just not liquid enough for us to trade. We have too many people trading it. But 1,000 is going to be a key number, I think. If you can't hold 1,000, I'd say you're probably looking at 900 again. What do you think?
Yeah, I mean, listen, this thing's been a dog for years. It's underperformed gold and palladium. Palladium's back big because that's telling me that the semiconductor shortage is coming to an end. But platinum's tough. It doesn't have a lot of investment demand. I mean, I love the value proposition, but I hate the price action.
Right. And sugar. Why is sugar, now we're long sugar still, but why is sugar so weak with oil so strong? I know that
I would imagine that the Brazilian production is pretty good here. I mean, that's what it seems like, feels like to me. Sugar, there's a lot of dynamics going into it, but the price is still
I'm
18
looking
cents. It's got to
hold on,
stay.
wait, I'm looking at the wrong chart. Okay, I
Got to
know.
stay above 1760. Sugar's
Okay.
got to stay above 1760, and I think it will. But we'll see.
I mean, it looks like it could be in a little bit of trouble, but again, you look back to the component that they use in oil, and we'll see. In the meantime, we are long at the moment, and then this is silver, which is what I had up, which is uglier than sin. And again, it's one of those markets that can't seem to find footing, and I think one of the things that continues to propel these markets lower, not only the charts look ugly, okay, but those who keep continuing to believe that it has to make a move higher, okay, because nothing has to be ever, okay,
Yeah, because they keep buying it and stopping out.
right, okay. Somebody emailed me today. Let me just read this real quick, okay. With all this inflation, why won't gold begin to start getting stronger? It's long overdue, and I wrote back, it can be overdue for a long time. There is no time frame on what is overdue. That is the same fallacy with the Bollinger Bands and with any math formula of standard deviations. Again, you can be overbought or oversold. It doesn't mean that it's going to go the other way.
Right.
When it's ready, it'll go the other way. And
Exactly.
until then, you can continue to try to buy it, thinking for all the reasons you want. The bottom line is when the price is ready, it'll move. And right now, this does not look ready to move. And it'll be quick. It'll be swift when it is ready. But this looks pretty damn ugly, if you ask me.
Well, you know what, Bubba? I'll tell you this much. I ran a big global bullion trading business for 12 years. And all the time that I ran that business, silver was under $6 an ounce. Okay. So, it's a different world now. It's years later. And, 2141 to me is the big level in silver. Can it break through there? Sure. Can it look under 20? Sure. Anything's possible.
Right.
Eventually, the price will be higher. From what level? I don't know.
Right. And the range
it could be from fourth. By the way, 2020, remember this? Silver went down to $11.74 before it went up, right? Before it broke out.
right. And if
Silver
you
is the king of the head fake moves.
And if you go back almost 2 years, right, a year and a half, we've only been in a range between 22ish, 21ish to 30. And basically the bulk of that trading was between under 29 and over 22.
Right. That's a 21 and a $30 stock. Going nowhere.
Right.
A stock trading 21 to 30. What would you say? It's going nowhere.
Going nowhere and fast. Okay.
Right. It's dead money, right?
Right now. Okay. Anyways,
dead
we're
money.
short. And it's 22 support. 23 is where I think is a spot to sell it. Okay. And I would be selling rallies until proven otherwise. The bond market, again, it's going lower. Here we're consolidating again. We're short. Interest rates are going higher. I don't care what anybody.
136. That's my target.
Yeah, I agree. Listen,
136. I think we're going to see that this year.
interest rates are going higher. I don't care.
Oh, yeah.
Okay. I did 22, 23, but you don't have to put them down if you don't want. That's up to you, honey.
I will say this. The only caveat is interest rates are going higher unless there's a major war in Europe.
Okay.
But I don't think that's going to happen. But if that happens, all bets are off.
Well, yeah.
Because the minute what'll they do? They'll ease. I
well,
don't know how they'll ease.
They'll have to borrow money. They'll have to put out, yeah, but again, they're going to become junk bonds pretty soon. In the meantime, from a straight chart standpoint, 154 to 157, 153 to 157, but I'd be a seller at 156, 157 all day long until proven otherwise.
And I wouldn't be a buyer at any price.
Yeah, right. Exactly.
Yeah.
Okay. Corn. Now this was a wild market, but when you look at it, it's no big deal. Okay. It was like, when's the last time you saw a normal day in corn that it was up 10, down 10?
No, this is a wild market. And by the way, look back on the chart. Tell me where continuous contract corn was at the end of January 2021. I think that's an interesting comparison.
2021 January would
January
be
31st, 2000.
Okay, right here.
There you are.
right there.
So not December 31st, January 31st. A year ago.
January 31st is right here. Okay, so February 1st, right here. So it was trading at 5. It closed at
A
5.
dollar lower. A buck
Right.
lower.
Right.
Yeah. Okay. That tells you all you need to know.
But there's the perfect pattern. They're just consolidating and breaking out. So they
Right. It's done
nothing
very
much to
well. And
test.
that's a good reason to be bearish on cattle because this market looks great.
No. So this looks like it wants to go higher. And again, look, it was interesting because they opened much higher last night, along with wheat and beans. And now beans were very strong today.
Yes. And wheat was weak.
Oh boy, it was up 30 cents overnight. Ended up closing it got cream.
Right.
But look at this. Now again, the soybeans look like they're going to 15 and maybe higher. Okay.
You must have talked to your Russian friends in the wheat market.
They don't understand that part of it. They just
Well,
they understand war.
right, but that's the war drum market right now.
Right.
Peace is lower and war is higher.
Anyways, we're long all the grains, but soybeans, they're look, if they sold off tomorrow, but would I be surprised? No, I would think that they can sell off as far as they could go to 1440 and still pretty big bullish. Okay.
Biodiesel, Bubba, that's a big part of this. Soybean oil, biodiesel, U.S. energy policy, ethanol, that's what's supporting these.
Okay. No, junk is much later, George. Don't worry. I get to. You just got to remind me when I after I go through all my stocks, you're about an hour away or so from that. Okay. And then wheat, which my buddy Ash loves to talk about, it's going nowhere. It's in a range. It had a huge move today. It was up 30 cents overnight and closed lower on the day. I mean, but where is it? It's stuck 750 to 820. Okay. And you think that's a big range? Not in wheat, not with the current market condition. Just look at it. Okay. It continues to rotate around the mean and fly up and down. Okay. And based on the fact that we're long at the moment, I suspect they'll still be long tomorrow. That I don't know, but what do you think, buddy?
I mean, I think this is the barometer for Russia, Ukraine, because Russia's the largest exporter of wheat in the world. And even if there's not a war, if the tensions mount, he could put an export ban on. He could do all kinds of things. He could blockade Black Sea ports. This is going to be a very volatile market for the coming months. And it's going to reflect politics rather than the weather and all the other stuff. So, if you want to trade wheat, widen your horizons. We talked about that last week, that in volatile markets, you have to be willing to lose more, and then you have to be looking to take more. And wheat is one of those markets where the horizons have to be much more expanded now.
Somebody wants to know, how do grains usually do if rates go up? Okay.
Look, long term, over history, stronger dollar is bearish for grains. But you know what? 2022 is no normal year. We have inflation raging. We have all kinds of other things. We have Russia. We have higher input costs. You can't look at those traditional things right now.
You know what?
The trends are going to be.
I have to disagree.
Okay.
I disagree when I'm on RFD. I'm going to disagree with you. Okay. Depending on supplies. Okay. Obviously, if they can find a place to buy cheaper, then the stronger dollar would affect it. But if there's a supply issue, which there is, it has zero effect. And in fact, if you look back, when the dollar was over par, grains were much higher at the same time.
So let me ask you a question. Ask you, what are you disagreeing with? That's what I just said.
I don't think that it necessarily, again, I don't think I think that too many people put the correlation from moment to moment when that's not a.
But let me clarify this because it's important. What I said was, a lot of people think that the dollar stronger weighs on grain prices.
Right.
What I said is, that's not the case here. It don't matter. I don't care if the dollar goes to 110 on the dollar index or it goes to 70. I think there's so much more at play in these markets right now with inflation and with political things in wheat, that I think that if you're going to look to trade off the dollar in these things or offer interest rates, you're going to get clobbered.
Okay, there we go. We agree. I want to make sure we understood the difference. I mean, because I understand. First of all, maybe you can explain this to me, okay, before we end this portion.
Sure.
Why do we continue to want a lower dollar for export? Isn't that basically just,
we don't, first of all, first of all, in the prior administration, he wanted a lower dollar as an economic tool to make our multinational companies do better.
Right.
This administration wants a stronger dollar because strong dollar policy, because listen, because if the prior administration said up, they say down and vice versa. So listen, Yellen comes from the school, stronger dollar is better, it's symbolic, whatever. To tell you the truth, let the dollar go wherever the dollar is going to go. It doesn't matter. It doesn't matter.
That's my point. So I mean, why, you know, again, you hear this, you hear the pundits say, well, we need a weaker dollar. What do I want? If I get a weaker dollar, I'm giving up some of my money then
But you
on
know
the dollar
why,
side.
can I listen? Because the pundits are idiots.
Well, thank you. All right. And we will end part one on the pundits are idiots, because they are. And we're just going to stop this recording. We're not going anywhere, but let me stop the recording and get a new one. Now, tonight, there's been an issue with Zoom. I'm giving you a heads up now. I'm separating into two, but for some reason, both recordings come on one piece, and whatever it is, it'll be what it'll be, but you'll have them both. Just look in the lower left-hand corner, and I will put a note on the update when you see it, so you'll know that if it is still the same problem, that both recordings are on one link, even though I sent it in two. Okay. All right. Anyways, stop recording and let my girlfriend speak to me. Okay, honey, thank you. And all right, let's get to the Monday night call now. And let me get to the recording. All right, what's up? And we are here, and it is Monday night. And of course, we've been here for quite a while because our new start time is much earlier. But you know, hear no data, see no data, and do no math. Well, that's kind of what we have going for us now, which is very unfortunate. I thought that Jerome Powell was his usual imbecilic self last week. What did you think of that Fed meeting?
I thought it was a lot of squawking and no hawking. How's that? I was hoping that they would end QE and raise interest rates by 25 basis points or 50. That's what the economy needs. Squawking, yeah, they talk real tough. They did nothing. They did nothing.
Right.
Nothing.
Exactly.
Actually, and in this environment, Bubba, nothing is less than nothing.
Right. Do we still call Girl Scout cookies Girl Scout cookies, or they call gender neutral fat ass stacks now?
I like that.
I mean, you know, I figured what the hell, right? And again, I want to remind you all. Now, I'm not saying that we're in a bear market, although I think we are. But bear market rallies are the most vicious. And if you look back in history, you will see that these big rallies came in bear markets. Okay, we'll see how this plays out. But I'm just sharing with you that, you know, the hedgers worry about the bear markets. And you know, if you've seen what's happened, you've got multi rolls, and you continue to raise your basis and accumulate stock and be able to make money on the extra stock. So it's been just fine the way it works, because the moves become much bigger and much faster as these people chase the markets around up and down. And it's kind of like the house I was trying to buy. I actually was willing to pay slightly over the list, and I gave her an escalator clause. She said, call me, I need more. I said, too bad, I'm done. That's it. We're not buying. I'm not going up one penny more. That's it. So anyways, my heroes are those who risk their lives every day to protect our world and make it a better place. Police, firefighters, and members of our armed forces, veterans, and all you. Every week we say thank you, because especially in these troubled times, you're always valuable. But I got news for you. It's a very scary times out there, and Andy and I stress this. We thank you for your service.
And it broke my heart watching the funeral of that young cop in New York City, where I'm from, last week, and some of the comments made. And it broke my heart watching that DA sit in the in St. Patrick's Cathedral and watch them bury this poor 20-some-odd-year-old kid. And, you know, still trying to decriminalize crime. It breaks my heart.
The looters, and I can't believe what's going on in this country. I am so distraught about it. But again, veterans, police, I thank you guys. Honestly, if it wasn't for you, I couldn't exist. And I hope that you continue the fight, because I know even for all of you, it becomes frustrating to get battered for nonsense when you're protecting people for no money, and taking your life in your hands every
Your
damn
dad, your dad served in the service, didn't
Yes.
he?
Well, and
So did mine.
in my office, I have two shadow boxes of my father-in-law and my father. Both had military funerals. Okay.
I'm very lucky. I still have my father, so I have him instead of the shadow box, but he served in Korea. My
Right.
father was also the commissioner of corrections for New York City. My son is a prosecutor. I support military, police, fire. I support all these people who keep us safe, and I detest when people go against.
My father and father-in-law were in World War II, and in fact, my father-in-law was a fighter pilot. But anyways, so Spotify has become the battleground for big tech censorship civil war. I mean, as you said, I mean, what you have the right to, if you don't want to listen, don't listen. Okay?
Right, turn it off.
Right. We're going to censor Joe Rogan. I mean, listen.
By the way, is the Joe Rogan show mandatory like a mask?
Mandatory listening, right? I mean, are you
Right. This is ridiculous. All right, Neil Young doesn't like it. He wants his music off. Okay, God bless you. I like Neil Young. I like his music, but you know what? God bless him. Take it off. Who cares? Anyone else? You want to take your music off? Go ahead. Who cares? But please don't censor anyone.
Right.
Want to make a political statement? I'm all for it. I'm behind you.
You know, you remember, right?
You want to tell everyone what they need to think? I'm all against it.
You know, you remember the KKK demonstration in Skokie, right?
Yes.
Yeah, that was like a mile from my house.
Yeah, in the 1960s.
Right. And they had to let him go. And I have no problem. Again, freedom of speech. And of course, naturally, they did in Skokie, which at that time was very predominantly Jewish anyways. But, you know, hey, look at what's going on today is so depressing. And this goes to this next one. I'm a customer of T-Mobile, and I have like 12 lines with them. And I told my guy, I said, look, if you guys go through with this vax mandate and you fire people starting in April, I'm leaving. You're losing me as a customer, because again, I am vaccinated, but I don't know what the right answer is. But I don't think forcing anybody to do anything of that nature is the right thing to do. And I'm very upset and disturbed that many corporations are following through on this. I just, again, the Supreme Court said it's not constitutional. And what do you think?
They're trying to follow the idiots in Washington, and and at the end of the day, look, corporations have the right to make their rules, and then customers decide whether they want to patronize that corporation. That's fine.
Bubbles are bursting everywhere, but cash is not the place to be, and that is for sure.
Yeah.
Okay. Listen, if you followed the dollar and you followed the inflation cycle and you have followed your own spending, okay, no matter how much more you make today than you made many, many, many years ago, it does not go as far. Okay. The dollar is a declining asset. Okay. With no hope, zero hope to ever be of any real value. That's why you have to put it somewhere, which is what does sometimes propel markets, because cash is not king. Cash is a diminishing asset when you're holding on to cash itself.
Everything is getting expensive. Look, Bubba, I looked at my my natural gas bill here in Nevada. We don't use a lot of heating. I think I use it for the barbecue and for the dryer. Last year to this year, up 110%.
Me too.
In the month of January.
Me too.
110%.
Me too. Again, I can't wait to see the next bill, because we're getting some rough weather. And of course, you got a huge week for the crypto this week, besides the fraud in the cryptocurrencies. But my real point here is that the SEC is getting involved now. Okay. And there's going to be a classification, okay, on some that will be listed as securities. And if they list them as a security, they will be listed as unregistered securities, which means they're illegal. Very much what Ripple is going through right now and has been fighting for years. Well, this is coming to the forefront, and this is more of government manipulation. What are your thoughts there, Chief?
The old saying, you can't fight City Hall. You got to be careful here. You got to be very careful, because listen, Ray Dalio said it best. If they want to kill it, they could kill it. And, look, it's going to survive. The big ones will survive, but can they knock big swaths of value off these things? They absolutely can. Be careful. The regulatory environment is there, but what they're not telling you, it's not mountains of fraud. It's control of the money supply. That's the real issue.
Which is the real fraud.
Right. Well, the real fraud is their control of the money supply. But what
Right.
they're worried about is losing the control of
Right.
the money supply.
The
And
real
that
fraud-
is, but that's, do you agree that's the real issue?
100%. The real
Okay.
fraud is the government and the central banks that are absolutely clueless, and they are so ridiculous at what they're doing. It's disgusting.
And do they want cryptocurrencies to survive and thrive?
No,
Right.
they want nothing because
Thank you.
they want to keep stealing.
Thank you.
Cryptos interfere with that.
The words of wisdom brought to you by our friend Connie, which is the official start of the call. Look for patterns in your failure. Okay. You know, we all have a tendency when failing to do the same things over and over again. And that the key is to learn from those mistakes and not repeat them. Okay.
The best quote on that one, other than Connie, because she always has the best quotes, is what Einstein said. He said the definition of insanity is doing the same thing repeatedly and expecting a different result.
Right. Which the government does, amazingly so. Anyways, again, watch yourself, chart yourself to look where you're making mistakes. Don't make them again. Learn to adjust, make new ones, but don't keep making the same ones, because you'll end up in the same crap hole that you are always in, especially in investing. Okay. If you always panic out, stay out why you do that and understand your own pattern and adjust around that. Okay. And of course, your words of wisdom. Okay. Follow the money, people. Look at who owns Neil Young's music. When did we just talk about him? Okay. I mean, the old story is always follow the money. Okay. In fact, there's a great show every morning on VSiN called Follow the Money. All right. But if that when you're following charts, you're following the money. That is telling you where the money is going. Okay. Whether it's coming in or it's coming out. So always follow the money. And again, obviously take ownership for what you can. All right. And of course, bitching, I've been bitching for an hour, but I get one more. And effective listening. You know, did you know listening is a skill? Okay. And you know, I get bashed all the time, right? For whatever I say or write, there's always somebody out there cranking me for something. Okay. And I go, you know, if you just listen to what I say, first of all, I disclose my positions every day. Okay. It's not like I'm hiding. And I also disclose that even though I'm short gold, silver, and platinum on the board, I'm still long them in my safe. Okay. So again, please, effective listening, it's a skill. Try it sometime. You might actually hear something and you might learn something if you learned how to listen. Anyways, to the markets, okay, and to Apple. Oh my goodness. And Apple naturally had what? Better than expected earnings. Are we shocked, Andy, that Apple had better than expected earnings?
No.
I mean, is it not common for them to under promise and over deliver on almost every earnings report?
I think they've done it for the last 10 years in a row.
Yeah. I mean, you know, again, none of this should be a surprise to anybody. Okay. They do this all the time. And unfortunately, we are on the wrong side of this. And I'm sure that will end tomorrow. But, you know, again, at the end of the day, it was a great trade until it wasn't. And suddenly you had the earnings, and the earnings were, you know, gangbusters compared to what they expected. And of course, listen, Apple is a country by itself. Okay. And it spiked higher. Now, again, at the end of the day, you know, I think that, you know,
It's almost twice the size. Their market cap's almost twice the size of the entire cryptocurrency asset class.
And they were almost equal for a while too. Remember?
Yeah.
So in the meantime, I can't in good conscience say that we're going to be short tomorrow. But looking at this, to me, I'd be saying 170 to 180 would be the levels I'd be watching right now. 170 to 180. Okay. Alpha Golf AG, which we are short. I had a little pop today, but again, look at again. This is again. I remind you, we predominantly follow this for when we get to the long side of silver. This is very much like the VXX. Okay. It doesn't make a lot when it's short because there's where's it going, but it has an opportunity to kill it when it turns to long. Okay. In the meantime, right now, it looks like to me, $9 is where it can go to. as the next stop, and it doesn't look like it can go past about 1050. Okay. Now it doesn't really change and trade in that big of a range unless it's going higher. Okay. So we're shorted in the portfolio. It's 950 to 9 to 1050. Okay. AMD, Alpha Michael Delta. Well, it had a big bounce. Now, are we shocked? Well, we're short this thing from much, much higher. Okay. It came straight down from 156, actually 160, all the way down to 100. Okay. Last week we said that, 100, 105 would be a level. Okay. And so now back up to, maybe 120. I would think this is probably, 108 to 120 right now.
Bubba, it's very interesting. Last week, palladium really took off on the upside. I mean, it got down to under $1,600 an ounce. It was back, let me take a look here. 23.75 last week, 23.50 today. That's kind of telling me that semiconductor shortage is really
It's over.
easing.
That's what
It's
you said.
easing big time. So that doesn't surprise me that these chip stocks might pick up a little bit here because the chip prices are high. And now if the shortage is over, they're going to make a lot of money.
And that would be consistent.
That would be consistent with price gouging.
Well, that would you really want to pound me on that, don't you? You really want my blood pressure to go higher.
I love it. I think it's so funny.
You want me to have a heart attack? We're in a call here. But what the price action tells you is that Andy's probably right, that the chip shortage is probably ending. And of course, the markets know first before anybody else knows. Okay. So don't be surprised in the next few weeks if this continues that you start to hear that the chip shortage is over, basically.
Right. By the way, this is why I don't trade lumber. I don't trade palladium, but I love to watch them because sometimes they give me clues, not all the time, but sometimes they provide clues as to what's going on. And, palladium all of a sudden started spiking high. I said, oh, this is telling me that the automobiles are going to start rolling off the assembly lines again. And what's that saying? Oh, that maybe there's more semiconductors. And, now we're starting to see it develop in the semiconductor stocks.
Right. And the markets will always know first. Okay.
And it's funny, the most illiquid markets tend to send the biggest signals.
And that's why the news is worthless, because by the time you hear it in the news, it's already over. Okay. In the meantime, as I said, about 108 to 120, Bravo Alpha. Were there earnings today or are they tomorrow? I don't even know. But I mean, they're coming out. In the meantime, we've been short BABA, and of course, we got a big bounce. Is Charlie Munger buying again?
If he loved it in Q4, you gotta love it here.
But if you look at it, I mean, really, where are you? So let's just clean this up for a minute, because this is interesting to look at. And this is something that you need to kind of get yourself in tune to. If we look at the overall action, what do you got? You have a market that is churning, from let's say 130 to 110. Okay. And basically we've been trading in that range for since November. Okay. So again, it'll break out eventually one way or the other. And based on past action, it should break to the downside, but we'll see. Again, that there's no guarantee. At some point that'll find a bottom. Maybe this is it. In the meantime, we're still short. 110 to 130 is the levels, believe it or not, because I think earnings are tomorrow, I believe. Okay. Or maybe they came out of them. Here, actually, I will find out. I can do that right now. Easier. And I know I can do it there too, but I'm not adept at that platform yet. So let me just go here where I know. I'll tell you when the earnings are coming out, and they are coming out on the 3rd, which is Thursday. Okay. So in the meantime,
Chinese company. I always say to myself with these companies, their earnings are coming out. Do you believe them?
No.
Okay.
I don't believe any out of China, except that they sent over the virus. Anyways, Bido, Bravo India Tango Oscar. Okay. Again, we haven't made a trade in here. We haven't declared any levels. I've got two agendas here. This is a way to potentially play the crypto world. Okay. Through the board. Number one. Number two, I want to see how they handle if there is indeed backwardation in contango, because typically ETFs is where you get screwed when they don't know how to handle the backwardation and contango parts of the markets. Okay?
One comment about this Bido. If timing is everything, their timing was impeccable, huh?
Unbelievable.
Hmm.
So again, this is directly based off the future. And again, futures. Now, again, I don't have enough data on cryptos yet because they're very limited in the way that you're allowed to trade them. Okay, but eventually they will develop a cycle, and that's really what I'm kind of waiting for. But certainly, I wouldn't be buying into this pattern yet, anyways. Okay, we carry no position here whatsoever anywhere, but it's something that, again, I'm a believer in the crypto world to a small degree, and that I think that you could have some representation. And this is, again, one we're watching along with Bitcoin Soup, which is Bravo India Tango Quebec. Now, this looks like it is bottom. Now, whether it has or not, I don't know. We carry this in no position either, but it does look to have found a potential bottom. Of course, it was at 36 and now it's at 14 or 16, whatever. You know, I would look at it this way. Okay. If you're looking to get in the crypto world, the space of cryptocurrencies, especially the Bitcoin type, to me, I would have no problem buying this here at $15 or $16. Okay. In a dollar amount that you would not be uncomfortable with. I think this is very important because, again, these can still go to zero. Okay. But you are playing, I don't know, Andy calls it Bitcoin Soup. There's about, I don't know, 100 different stocks, miners, and things involved in here. But I do look at this that it may have potentially found a bottom. This may find the bottom first. Okay. So in the meantime, for levels wise, 14 to 18, Connie. Chewy, Charlie Hotel Whiskey Yankee. Well, it has found, and we said this last week, maybe this was a blow off to the downside and we're going to see some upward momentum. Now, we are still short officially, but it has had a nice bounce from 36. Okay. And I would say that right here is 48 is probably the key to watch, and then 52. But again, it's certainly, it could rally and still be ugly. That's the point. It's still in a pretty nasty downtrend. You take it from 96 and you cut it by 2/3. It's pretty ugly. Okay. Now, again, we can't understand why it's such a good company, but again, it doesn't really matter. Price action dictates all. Okay. So in the meantime, for here, I would say 40 to 50, but 52 is probably the real level if it's going to fail. Okay. Coin, nice pop today. And again, this may be Charlie Oscar, India, November. This may be bottoming as well. Okay. Now we carry a position. We're short. Okay. And have been short, but it does look, again, like it's going to make a bigger move from here. Obviously, Coinbase is the bookmaker, okay, of the crypto world. They don't have them all, but they have the liquid ones. And as we know, volumes show up in up markets. They don't show up as much in down markets in the crypto world. What do you think, buddy?
Yeah, I mean, I'm looking at Coinbase. I'm looking at the reference price. I'm looking at how high it went. I'm looking at how low it went. I think it's sending a signal. I do think that we're close to a bottom on cryptos. And depending upon what the IRS and SEC do, I don't think they're going to attack Bitcoin and Ethereum.
Right. I agree.
And maybe they'll attack Dogecoin and some of the other stuff, some of the little stuff.
I think the real big ones are going to leave alone to their devices.
I think so. And then I think you get an explosive rally.
Right. And again, this would be very good for Coinbase as well. Again, we're still shorted, but again, this is, I have a position in this that is hedged, which I've accumulated a lot of shares. I've accumulated more shares than I bought originally. Okay. But in the meantime, again, if I'm looking at it from this chart, 160 to 210. Okay. And again, everybody says, well, you make such big levels sometimes as well. I mean, I haven't looked at the options recently, but I can guarantee you that the numbers I just gave you will fit well within what expectations are of movement based on the volatility. And of course, in the next 11 days, it's looking to move $22 up or down. So that fits right in with the numbers I just gave you, $22 up or down. Okay. We're kind of in the mid range of this overall sell-off. We'll see. Okay. In the meantime, 160 to 210. And
I like that because the low before we broke down was 208, So that's probably a nice resistance level.
Right. Now, we're not going to, I'm just going to show this. We're not carrying it anymore, and I'm not going to go through it. This is just a retailer on pop. But again, I said this.
Burn, baby, burn.
Right. I said this on Friday on Liz Clayman show, which is why I kept it for one more day. It was a little bit higher today, but I did say that I think that if you want to play federal legalization in pot, you want to look at Altria or Constellation Brands. I don't think this is worth, this, I think they're going to let these go bust. These just have no traction whatsoever. DraftKings might have found a bottom here. Again, we're short in the portfolio. So, again, always give you full disclosure what our position is. Andy and I both own it. And again, they've got their issues. Okay, again, their acquisition cost is way too high, but again, that will be solved. And what you're seeing now is some of the solving, because in the betting world, if you don't understand the betting world, okay, what the biggest concern for them is not wins or losses, because they don't really work off of wins or losses. They work off of what they call the handle, which is the amount of dollars bet. And it is my understanding that last weekend was one of the biggest weekends in history of amount of money bet. And it's only getting bigger. Okay. So again, this is ugly. Yes, it's, I have it, I'm hedged it, but I am
tell you
short.
something, Bubba.
Go ahead.
At a market cap of under $9 billion, I think that this stock is a screaming takeover candidate.
It's in play. Right.
Yeah.
And again, eventually, I think what you're going to see happen, Las Vegas still controls casinos. Okay. And they don't offer anywhere near either the freebies that these do, nor the bets that you can make. Okay. These other apps, DraftKings, FanDuel, Penn, all these, they offer crazy plays that people love to play. And Las Vegas is not ready for that yet. But when they are ready, I would not be surprised to see some of the major players take over some of these, and for nice profits for the shareholders as well. So we'll see. In the meantime, we're still shorted, and it's 19 to 25, but it's obviously it's got to get through 22 here first, which is the first resistance. Facebook, I believe there's earnings this week, which is probably Thursday, which is typical. We're short Facebook, and you had this nice little pop here. Now, again, other than the portfolios, I don't like people to trade in these earnings plays, because again, you get trapped, and they're not good for we carry them because we hit on the right side of about 66% of them. Okay. But again, if I were looking for it, I would take a neutral position, and if I didn't already have a short position. Okay. But this could go very big. And I think the expectations are probably about 10% either way, which is obviously very big and very much priced in the option market. And well, I'm wrong. It's about 6%. Okay. As a move, $20 up or down just on earnings. Okay. So we'll see. And I mean, and we're short. And I would say that, if it wasn't for earnings, I'd be looking to take another short position and add on. But because of earnings, I'm not going to add here. But to me, this is the very key level. 320 would be about as far as I could see this going based on the pattern that I'm watching right now. Okay. And I would say this is 290 to 320. But again, it is earnings, so I would be very cautious of putting in new positions, because you're going to get a news announcement in front of it. Okay. First Solar, Foxtrot, Sierra, Lima, Romeo, which we also remain short. And again, really, you had a nice bounce. Okay, so it bounced off of 72. Last week we said 72 to 80. Guess what? This week, 72 to 80. I get nothing's changed since we looked at it last. It's still stuck in a range. The trend is down, and that's it. There's nothing else to really talk about in this particular security, because the trend is still lower until it changes. Now, I could actually look at today's action as a potential blow off to add to my short position, and I am not recommending that either. Okay, again, I don't typically, if I like to add, it's usually in the futures market. I don't like to get involved in these wide bid offer spreads for a short-term trade. But certainly 70 to 80, and I would have no problem if you said, hey, I'm going to take a short position at 80. But if you're going to do so, just make sure you look at it when it gets to 80. It's not like a blanket 80's it. If it holds around 80, it can still break out from there. So you got to understand these are not levels that just you set them and forget them. You have to look at them when they get to those levels. Okay. GDX, nice little bounce today. Again, naturally with gold, and it's really just stuck in this range. And we have a position in it which we are still short, and just kind of hovering between what 29.50 and 31. And I mean, Andy and I both like it as a.
It tends to be, look, GDX tends to be a 2 to 3x to gold on a percentage basis. It just exacerbates it on the up and the downside. So I look at it as a kind of like a leveraged ETF without time decay for the gold market.
And it's right. And it's also for some who are uncomfortable holding a future, for example, or trying to make an options trade. It's a stock you can hold as a play to be long gold.
Right. And it also, it's a diversified portfolio of miners. So you don't have the individual risks of management and particular mining properties. It's all blended in there. So that's why I like this product.
Well, I don't get this. Why bookies are no tax? Why? Because people are afraid to play with bookies. Not all bookies are straight up. There's a lot of reasons why. I mean, but most gamblers will keep their bookie because they give credit.
Right.
Anyways, 29.50 to 31. Goldman Sachs, okay, a little bit of a pop, and of course, we're still short, which we are short most things here, and we're in a range, okay. But again, Goldman is the best in the business, and I think that they're not thrilled, although they've rallied since the interest rate announcement. But obviously banks would love to see higher rates, okay, but we're really just kind of churning at a range, 330 to 360.
I'm right. And what did the Fed actually do last week?
Nothing.
Right. Thank you.
Absolutely nothing.
Nothing. Absolutely.
Nothing times two. Anyways, 330 to 360. IWM, India Whiskey Michael, which we're also short. And again, you're in a range. It's 192 to 204. That hasn't changed either. Again, just because it had a couple of big up days, it really just got back to where it was on the down days. So now it'll make a decision, and based on the overall pattern, the decision should be down. Now, again, is that a guarantee? No, there ain't no guarantees. But what we do know is that the pattern suggests, and I would say that, here at 202 might be the spot to sell it. Okay. Because again, it may be making lower highs, and you've seen consistently that this has made lower highs, and you're always going to get the consolidate after you get a dramatic move in either direction. Okay, you're going to get one of three things. Okay, either it's going to continue, which means it's going to reverse faster when it does, or it's going to pause and reverse, or, and more common, is it's going to go into consolidation, and then depending on the trend, it usually will continue in the trend in which it started. So my expectations as of now are that this consolidates, it sells off, and then it starts to move in the downtrend, because one thing we do know is that the pace or the speed, as we said last week, is too fast. Okay, the angle of retreat, just like the angle of ascent, needs to be smoothed out. They don't go straight up or straight down. Typically, solid trends are at about 45 degrees. And so if you drew a 45-degree line in here, you would find out that there's room to rally and still be somewhat negative. And you can look at the daily, if you like, you can look at the moving averages. That'll give you the same information. Okay. In the meantime, 192 to 202. Okay. Mara, which we do hold a position in, Michael Alpha, Romeo Alpha. Okay. And we are still short. And again, as I said last week, and I'm going to say this week, 20 to 25. Okay. I mean, again, if Bitcoin has bottom, then this will reverse and it will go higher. But again, we don't know that Bitcoin is bottom. We don't know what's going on here. And of course, I'm interested to see, with all these higher energy costs for these miners, Andy, what's going to happen to them as well. What do you think?
Yeah, I mean, as their bills roll in, they're going to be ugly, right?
I think
I think so.
so.
Unless they're using solar. I know one of them, I forgot which one. One of them's in Vegas, so maybe they're using solar.
Yeah, they better use something. Anyways, 20 to 25. Neo, November, India, Oscar. Of course, we're still short. And again, a bounce. Oh, shocking. We went down from 32 to 19. Is it a shock that you got to bounce? No.
Chinese stocks are just so weak across the board.
Yes, and you would be I would be looking at 26 to be a seller. Okay. Again, we're short already, but 26. And again, 20 is probably support, but I'm not a buyer. Okay. I'm going to look, this could go to zero. It could go to who knows where. It could go anywhere. But right now, the trend says it's going lower. It looks like it's going lower. And this to me just looks like a dead cat bounce in a market that looks pretty pathetic. Okay. And all, again, if you look at any of the Chinese stocks, especially, they're especially weak. Okay. Nugget, which is even a bigger steroid. Okay. November Uniform Golf Tango, which we are still short as well. Again, you got to bounce. Okay. So we bounce, but we're still short. And again, overall, it looks pretty ugly. Okay. That would be my view of this. I mean, 46 would be resistance. And I think, 40 is obviously the support level. And, you get in this, when you're short, you get the double whack because, again, this kind of decays on its own anyways, because this is
it's GDX times 2. So you do have to deal with the time decay.
right. And so when you're short, you're benefiting because of the decay. Okay. Because it is headed lower on its own under any circumstances, because again, the leverage ETFs, which Andy will tell you, I think is 10 days is your max or 13.
Yeah, 2 weeks, 2-week max.
Right. Okay. They have, these are for trading vehicles only, which is why we don't carry them in any portfolios long term. We carry them as short term trades because when they get it going in your favor, the multiplication table works in your favor. It goes up much faster, kind of like the debt. Okay. The higher the price, the bigger the multiplier. Okay. It's the same as when Biden said, a few weeks ago, the states were gouging, the gas companies were gouging. Of course, he forgot to say that, well, we charge X amount of tax. And when it goes from 1 to 2, the tax also doubles, which makes a big part of the price. So that's what happened.
He didn't get to that part of math yet.
No, I know they don't understand it. But in the meantime, what that means is that these are in play typically more for the long side, but you don't get hurt on the short side is a rule. Okay. So that's what you're looking for. In the meantime, 40 to 46, NVIDIA, November, Victor, Delta, Alpha, more proof that you may be correct on this chip shortage being over. Now, we are still short at the moment. Will we still be short tomorrow? Well, again, based on the pattern, I can't see a reason to reverse yet. But again, we'll see what the actual algorithm says. From now, I would look at this at 255 as resistance and 210 as support. Okay. It's a big range, but again, this stock moves 10, 12, 15, $20 a day without even thinking about it. And again, just to give you an idea, okay, the actual expected price movement here is for the rest of this week, for the next 4 days, $13 either way, plus or minus. The next 10 days or 11 days, $20 plus or minus. There you go, 10% plus or minus. So again, that's why you give wider ranges, because that's what the market is giving you. Okay. Bitcoin Soup, Bitcoin, BITQ, Bravo, India, Tango, Quebec. Okay. Penn, Papa, Echo, November. Now this has looked a little bit better as well, but we're still short in the portfolio, and this is still ugly on a charting one. Again, this is another play on casinos, or not casinos, but online gambling. Okay. Now, part of their business, which is the horse racing, I mean, it is because of Penn that many tracks are still in business because they produce bigger purses. However, it appears to me the horse racing business is dying, but the gambling business is growing rapidly. So again, I would expect this, like DraftKings, to come from either get taken over or move higher. They do have earnings this week, but again, we are still short. And again, I don't look to buy stuff, when it's in a downtrend, even if it's for my long-term portfolio. I'd be looking for opportunities within. But for right now, with earnings this week, I would be very cautious, but I would make the levels 40 to 48.
Also, this one, 7.7 billion market cap. These are not expensive companies.
Right. They could be taken out in a moment.
In a moment.
The Qs, Quebec, Quebec, Quebec. And of course, we're short these as well. And a big spike up the last 2 days from 340 to 363. Pretty big move. I would not be surprised with, now again, I think tomorrow we're going to probably see some divergence between the futures and the ETFs. So we'll see. Today we had reversed the Dow. Okay, which I forgot to do the indexes. I can't believe it. I'll do them afterwards. Or did I do them? No, I didn't do them yet. In the meantime, we did reverse the Dow, but the diamonds did not reverse yet. Okay, so again, you'll probably see some divergence. I'm not going to give you a call here. The levels I can see today would be 352 to 365-ish. Okay, but again, I'm not going to make anything conclusive here because I can't really tell. I don't know, but it looks pretty powerful. And even if it's not, it could be powerful enough to have triggered. Okay, so I'll have to see what it looks like after we run them. Riot, again, much weaker than Mara, which used to be much stronger than Mara. And it's really just in the same kind of range, 14 to 18. That really hasn't changed. Romeo, India, Oscar, Tango. Okay. I forgot. Yes, that's okay. I got him. I'm sorry you're not feeling well, but yes, I'll get to him. Okay. I realized it myself when I started to talk about the Dow. In the meantime, again, 14 to 18. Roku, again, a little bit of a pop here, but you're going to get rallies in bear markets. Again, this is what I'm always saying to you is the biggest rallies come in bear markets. You don't get rallies like this in the bull markets. Okay. These come out of nowhere and look so appetizing that people can't wait to jump in, which is what immediately spins them around and they end up going lower again. Now, I'm not saying this is going to happen here, but we haven't done anything to warrant me get too excited. And I would still say 140 to 170, okay, which is basically the same level I set last week. Okay. The SPY, Sierra Papa Yankee, again, it is spiking through, but again, to me, this is still in ugly territory and still below the original breakout spot. So again, for now, we're short, and I wouldn't be surprised, and I would suspect that 450, 451 would be resistance, and I think that you're looking at 428 as support. Okay. Tango, Quebec, which we don't cover anymore, but I just want to show it today. Again, this is just the Nasdaq on steroids. Okay. But to me, see, this is not done. This would not, in my eyes, this would not reverse under any circumstances. This is to me is a sell right here. Okay. In fact, I got to make a note of that. I may have to sell it tomorrow. Okay, depending on how it opens. But this is, to me, I would be selling this at 65 or 63. Okay. Tesla, at a $90 rally after getting destroyed, okay, day after day, okay, and certainly, get down to 800, okay. So to me, you're looking at this stock that's broken to the downside, and I would say it's probably right now 800. I mean, 1,000, probably 950 is the right resistance. Now, I don't trade this myself at all anymore, okay. I would only trade this under duress of a huge move in which I was going to just sell a spread. I wouldn't take any real exposure here, but because for whatever reason, if we go back to Connie's words of wisdom and patterns, I can't stomach being long this stock, so I can only short it, which is why I quit, because it kept going up. Anyways, the Victor X-ray, which of course we're long now, and it's going back straight down. Now, as I said, and what do you think? I think it's time to take a shot on volatility. What are your thoughts?
Yeah, listen, I've been liking buying it on dips. Listen, this is a trading. Hold on.
Bless you.
Not a sneeze. Sorry.
Bless you.
Thank you. This is a trading sardine. I like buying this on dips. I like trading, looking 4-to-1 payoffs on this one. The totally trading sardine, not a trend following sardine in the VIX. For me, And what I do with this is, when the market comes down in this environment, I like to be long this. I'd much rather be long than short this, Bubba.
And if we made a ton on the way down,
Right.
and now we're long, and we're a small loser now. But again, this would be the time to take a shot, like, in my opinion, because I only see volatility spiking, and it is very common to see volatility get cracked when you get this complacency and you get the market
Right.
rally.
Remember, a week ago today, volatility went to 40%. The VIX itself went to almost 40, 39.
Exactly.
you know,
Exactly.
And this thing is gonna go with it.
So that would be my views. I'd be a buyer at about 21, and again, it's 28 is where I'd be looking to get out. Win Whiskey Yankee November. Okay, and we're still long win, and it's just churning between 80 and 90. Nothing has changed. It refuses to move, so it's 80 to 90. Okay, and XBI, X-Ray Bravo India. Look, again, here we are stuck in this range. It broke down as we thought. And we said if it got through 100, it was going down and banged down to 84. You're getting a bounce. 96 is resistance. I think it's probably 86 to 96. And zoom. Okay. I think we took this off, but in the meantime, we are or would be still short this. And it just looks like ugly, pathetic. Okay. And I would be a seller at 160. Okay. And of course, I forgot to do the major indexes, which I always do. The Dow, YM, Yankee Michael. We are long the Dow. And of course, we got long this morning into the sell-off. And here you are, it is breaking above. And again, so the difference is the Dow was the strongest on the way down, which is typical of a bearish market. The Dow would be the strongest index. And it was above the major resistance, which is why it reversed. Here, I would say probably 34.6 would be a spot to look to get in. And your next move up is probably about 35.2. Okay.
The Dow has the least exposure to interest rates.
Right. And it's also still the index where people run for safety.
Right, exactly.
Whether it's good or wrong.
It's
right
the
or
home
wrong,
of Clorox and companies like that.
right or wrong, that's where they go. And again, that's why the S&P is always so much stronger. And but in fact, in 08, the S&P and Dow inverted in value.
Yeah.
The S&P, again, see here, I don't see, to me, this is resistance here. This is not quite as strong, although it looks great. But again, it has not yet to breach where it broke down from. Okay.
Hey, Bubba, take a look. Where did it close on? Let's compare where it closed January 31st to today.
Okay.
December 31st. Sorry.
You mean this December 31st, 21?
Yeah. The S&P 500.
Okay. December 31st, it closed at December 31st, it closed at
47.58.
47.58.
And where did it close today?
45.14.
Okay. And the low, I think what happened was
4,200.
right. I think it came back enough not to put in a bearish reversal on the monthly chart. I was looking at that late last week, and I think it just made it. If you look back in the beginning of December, you'll see that low. We closed just above that low, because I was comparing it to 2020, February to March, and you had a 35% down move, and we just avoided that today. Very interesting.
And the Nasdaq, November, Quebec. Okay. And this, just like the others, like the Dow, not the Dow, but like the S&P, still got room to go. 15,000 is still resistance. And again, could it change? Yeah, I could be wrong. But again, based on the work I do, this was the key breakdown right here.
Right. And this did the worst. And that's why the recovery today was better than the others. This and the Russell.
Right. And the Russell is still ugly. Okay. The Russell is by far the weakest of all. Okay,
but we know because the administration is killing small business.
Right. And so to answer your question, yes, I'm still bearish to Russell. And I would still be a seller, and I'm still short. And to me, 2040 1920 to 2040. Okay. And the VIX itself, which Andy had mentioned earlier, Victor India X-ray, VIXI is at 24. Again, it has collapsed once again after the spike up over to 40, and it has now once again come down. And to me, this is probably a spot, which is why I said if you felt like, now I'm not encouraging you to gamble, but if you're looking for a gamble spot, that would be a spot to gamble on, which would be the VXX. And junk, I promised I would do it. Juliet, November, Kilo. Okay, Juliet, where am I at? There you are. Juliet, November, Kilo. And it looks like junk. High yield bonds, yeah, of course it does. I knew what it was actually, but this looks like crap. I mean, look, this chart has no indications of going any higher. In fact, to me, it looks like I'd like to sell it. Okay, and it looks like it's going a lot lower.
I think in a couple of weeks or months, we're going to be talking about the bond market as, we look back, it was like a case of today's lows are tomorrow's highs. It just feels that way to me.
I would be a seller of this at 106 for sure. Okay. To me, this looks like garbage. Okay. The trend is pathetic. And as are high yield bonds. Okay. There ain't none. So again, in my opinion, this looks horrible. Okay. And it's a sell. Okay. And that's I know that's realty income, I think, right? Realty income corporate. Yeah. I mean, again, this is dead solid consolidation. What's the dividend here? I'm sure it's pretty solid. I don't know what it is. I don't know what it is, but whatever it is, I'm sure it's pretty good.
You know what else, Bubba? If you haven't refinanced debt, there's still time.
Get her done.
I think a year from now, 2 years from now, you're going to be kicking yourself if you don't.
I agree.
Make sure that your debt is refinanced at very nice levels.
I agree because, as what's going to happen, as I've always said, the Fed has never made the right decisions.
I know. Hey, by the way, when I first took my first mortgage back in the 80s, I remember I paid probably what you pay, like 13, 14, crazy percent,
Right.
That was the market.
Didn't matter.
I remember my dad telling me, when he got home from Korea, he bought a house with my mom and they got a VA mortgage at 4.5%. And I was like, 4.5%.
Right.
I'll never see that in my lifetime.
Yeah, you'll see less.
Right.
You'll see negative rates, basically.
Incredible. But you know what? You have to remember that because even if a 30-year mortgage rates, what are they, like 3.5%, 3.4% now? These are still very low rates. They're going to be much higher.
And they're negative, basically nominal. But anyway, 4%, 4.25% dividends. Again, nice, reasonable dividend. What was I looking at the other day? There's one that's actually recommended was a huge dividend. It was like 7%. Was it Altria? I gotta look at this real quick. I think Altria is like 7.25% right now, which is, considering where the stock is really high. Okay.
Look at BHP, and that's a stock I like. I mean, just in general.
Bravo Hotel, Michael.
BHP, Bravo, Harry, Peter.
Let's get it right. Air Force, key letters, Bravo, Hotel, Papa.
Okay. What's the dividend there?
Probably pretty big. I'll look at it. I could look it up. I am capable because I have it right here.
No, because I think it's real sexy.
Probably 12%. Yeah, 12.5%.
Yeah. I mean, this is a stock that has a lot of upside potential because of minerals and copper and all the stuff that they produce and they're earning. And hey, 12.5% dividend is pretty attractive in this interest rate environment.
Now remember this, okay? Dividends. Okay. Dividends are great because they're taxed at a better rate, but the dividend comes directly from outside the stock. So when this goes ex-dividend, the stock goes down by 13%.
Right.
I mean, again, just everybody understands it. And I want to make sure,
there's no free lunch. It's 6 of one, half a dozen of the other.
Right. Well, again, if you want to use the Warren Buffett model, okay, he makes $13 million a year. He takes 12.9 million in dividend income that's taxless, which is why he pays less tax than his secretary, and $100,000 salary. Okay.
I think it's 13 billion, isn't it?
Well, I think he takes 13 million salary. He probably makes 13 million, is right.
Right.
And another good one, Volley. Okay. Yeah. Actually, one of our members told me about this, and oh, it had a yield. I don't know what the hell happened. Maybe I took it out. I don't know. Stock's up now. It had a big yield, which is why I bought it, and I bought it at $12, I think. But anyways, and are there any else that you want me to look at real quick? I will take. You got a couple of minutes if you want to look. I will look. Okay.
Take a look at Valero.
Valero, that's one of your babies.
Victor Lima Oscar.
Yep. In fact, I recommended it on Liz Clayman on Friday. How about that?
And look at the dividend on that one.
That's actually a nice little. This is like a cup and handle pattern too.
Yeah.
For those of you,
the dividend is sexy on this one.
For you CMTs out there, it's a cup and handle pattern. Victor Lima Oscar. Yeah, 472.
Yeah, that's not bad.
Yeah, that's great. Listen, you're not going to get that at a bank.
No.
The chart of rallies of a bear market. If we are in a bear market, we are at now. Should a person hold? I always hold stocks. I mean, I hedge them, but again, I'm doing my presentation on Saturday about hedging. But even if I didn't hedge, I would never sell. The only time I would sell a stock, to be quite frank with everybody, is if something fundamentally changed in the company that I thought they were going out of business.
Right.
But I feel the company is strong enough. I am not selling it. Okay. You're going to do much better. As they say, one of the advisors' key selling points is it's time in the market, not timing the market. And again, I think you go broke trying to time it. I think if you're in properly, and I mean properly with money and not desperate for cash and desperate for it to go up, then you hold. Okay. If you have a problem with that, that means your position is too big and you need to reduce it because you want to prevent yourself from panicking out, because the markets in history go up 8 to 8.5% per year. Okay. So I would not sell. Okay. Okay. Vertex, always you with your stuff. Vortex, Victor Romeo Tango X-ray. Victor Romeo Tango. Did they take away the dividend in Valley? You would know. You're the one who gave me Valley in the first place. Okay. Farmer, will they have an announcement today on something? I know. Oh, what did Moderna do today? That's what I'm curious about. First of all, this looks fine. It broke out nicely. I couldn't stop up and buy it now, but it looks great. Okay. I mean, everything. There's nothing to complain about here. What did Moderna do today? Michael Romeo November Alpha. Oh, not very much, considering they got approval, full approval today. FDA, everything is kosher. Okay. In the meantime, that looks like it's making a bottom. All right, kids, listen. As always, look, we have a very tricky market right here. I do think we're in a bear market. Okay, I think this is the start of it. Now, I could be wrong. So again, I don't want you to don't run out and get short and do everything based on what I'm telling you. I'm giving you an opinion. Okay. I think we got a rough road ahead, but it's never easy. And they're gonna challenge you at every turn. Any thoughts to that, sir?
I mean, that's exactly right. The rip your face off rallies, time will tell if that's what today was.
They're going to challenge you at every turn.
It's a bumpy, listen, markets reflect, we don't listen to news, we follow trends, but those trends reflect politics and economics. We're in a very, very bumpy period for both, with inflation, with all kinds of problems with Russia, with China, with all this kind of stuff. Expect the unexpected, expect a very bumpy path, and follow the trends because they're your only friends.
And
if you want another friend, get a dog.
I think we're going significantly lower, but again, it doesn't mean it's going to be easy, and it doesn't mean it's going to be tomorrow. So always be careful. But I would recommend, with this light volume we've been witnessing the last few days, exercise even more care, because this is pretty pathetic from a volume standpoint. Now, I don't usually look at
watch the leverage,
but this is very pathetic. So be careful. But I would expect this rally to fail, and we'll see what happens there. In the meantime, everybody have a great week, and we thank you for being here, and it's always a pleasure. And we will see you. Many of you I will see sooner. And those day traders, no trading tomorrow. I made a mistake. I got minor surgery tomorrow. So remember, I have no trading tomorrow, but back Wednesday. Have a great day, everybody. We'll see you later.
Take care.